But year-to-date job cuts are up 55% from year-ago levels, the highest since 2020. Our next guest says you usually see these numbers during recessions or a period of major disruption, such as the first wave of automation. Joining us now is Andy Challenger, Senior Vice President of outplacement firm Challenger Gray and Christmas. Andy, great to have you with us.
Thanks for having me on.
So it sounds like if you took a look at the numbers, you would think that we're in a recessionary environment, and yet we have the economy here humming along, so to speak, and in some degree. And I'm wondering if you sort of look at this and are puzzled, or does it make sense?
Yeah, I think it makes sense to me from what we've seen in the labor market for quite some time. We've been going through a gradual cooling of the labor market for more than 2 years. It's continuing on that path. We have seen an elevated number of job cut announcements this year. In fact, it's the highest since 2020. The Q3 numbers are the highest that we've seen since 2020. So it's not just the DOGE cuts at the beginning of the year, but it's continued throughout this entire year that we've seen this elevated number of layoff announcements. And our perspective in the world, which is talking to companies that are going through layoffs and working with people that have just been laid off, we're expecting to stay quite busy through the end of the year and into next year. And in fact, are preparing for an acceleration.
So in your conversations with companies, Andy, I'm just curious what the stance in general of the companies are, what the mindsets are. Are they laying out their layout plans but not executing yet? Do they intend on executing? What are the sort of reads that you're getting?
Yeah, and I'm biased. I'm only talking to companies that are going through layoffs. Right. So it's my perspective. But we're seeing a lot of companies throughout the year announcing layoffs because of downgraded forecasts internally, that they are worried about economic and market conditions. Then really just in the last couple months, I'm in earnest seeing companies announce job cuts and attaching it to artificial intelligence and the way that's going to be changing their workforce in the coming months and years.
Andy, how does this fit in with what's become a fairly common view, it seems, of the labor market, that we're at this kind of uneasy equilibrium, the not much hiring, not much firing going on? The aggregate numbers seem to suggest that. You have low new jobless claims from the official data, but the continuing claims are building up, and there's not a very high hiring rate happening.
Yeah, I mean, for us, the signals have been relatively negative on the labor market for some time. It hasn't been disastrous. We don't see the types of layoffs that we see in a sharp recession where things fall off a cliff. But we've seen steady activity and cooling in the labor market for a long period of time. And at some point, you hit an equilibrium. Coming out of a really, really hot job market that we had for so many, 2 or 3 years. Now, I think there is the real concern that layoffs beget layoffs beget layoffs. If more companies continue to cut, that can further erode consumer spending, confidence companies have, and lead to more layoffs. So, the hope is obviously we land in some soft place and things really level out from here. But we really would not want to see the labor market weaken much past where we're at to feel like we've really controlled the overheating that we experienced for some time.